What am I gonna talk about today? GEI on Toronto Stock Exchange, and that is Gibson Energy Inc. Here's the monthly candle chart, 10 years. I removed the 10-month simple moving average. Do I need it? This is my classic chart trading framework. And I'm going to always start from a top down, higher time frame. And if it passes the test of the top time frame, then I go down to the weekly. And on the weekly, I'm not going to apply my chart trading framework. I'm going to apply Stan Weinstein's stage analysis. Okay, so here it is. I always start, scoot over, and try to outline with using the opens and closes to draw my resistance and support lines. Outline the bigger pattern, and then as you move towards the price action, there's smaller, more intermediate patterns with different support and resistance lines. And you see, over time, the support went up and up, and the resistance were still the same. Except for here. There you go. This is how tight it is now. So right now we have this pattern closest to the price action, encompassed by the larger pattern all the way here, including between these two lines. And after that, that pattern is even bigger right here between these two lines. And the final and biggest encompassing pattern is that one there. And these are all targets. Target number 1. Target number 2. Okay, let's do it the opposite way. Target number 1. Add it to the breakout line. Target number 2. Target number 3. Okay, this is target number 4. And target number 3 is if it would be price action that would come here and play around. Oh, this resistance line, then it would be this pattern here. Use your imagination. There you go. Create parallel. That's a breakout line. And that's pretty much how it looks like right now. So when we're going to look on the weekly, this is the pattern. Remember, these are monthly candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That's like it's 11 months, almost a year sideways move right here. Tuning in. And over here, 2 years. And this, almost 3 years bottom pattern. Bottom or top, we don't know yet. We'll have to wait. And for the biggest of the patterns, you want to close above 19, and that would be this measure move here, the biggest target, or this one, or this one. the closest being the most probable of getting reached, and the further you use the encompassing targets of the bigger patterns, the target moves higher and higher, less probable to be reached. Then after that, you have to here's target considerations. You see this one here, support, turn resistance because of a breakdown. This becomes a resistance. So this target here is the most probable right here. If ever we get some price action, a little launching pattern right here, this is the most probable. These two, they're going to run into congestion. So what you want to do is you want to use always the closest, most probable target, the less greedy one, emotion management technique. And if ever there's a breakout on the monthly, you're more probable of reaching that target than those further away targets. And worst case, if the price action slows down, you get a sideways move, and then after that, if you want to play again, then you get in. All right, so that's enough for the monthly candle. Let's go on the weekly. On the weekly, we have 18. Okay, let's do it now. 18 is a breakout level. We have everything here. The Ichimoku cloud under the red cloud downtrend, over the green cloud uptrend, 30-week moving average, another indication of trend, and a super duper important volume indicator, and my RSI because I don't have the Mansfield. Okay, let me zoom in. This is definite. When you see the price action going through the thin green cloud and getting stretched sideways, and the green cloud becoming red and the red becoming green, you know in the stage 1 or 3. Very tight. Let me remove that. Let's remove all the trend lines. Let's clean that up. Okay. So right now, this could become either a stage 4 breakdown below 16 on the for the weekly, or a breakout if we get to close on the weekly above, I'd say here, above the 1930 level. Hold on. Let's remove the Ichimoku cloud. Ichimoku. Okay, stand. Breakout. He wants a breakout above the 30-week moving average, above a horizontal trend line going upwards. So if you'd have a case here where you have a breakout candle right here with double the volume of the average of the previous 4 to 5 weeks with his Mansfield, but I'm going to use RSI, going through the halfway point, going upwards above the midway point. Let me do that candle here. Have the candle like that. 1 million, 1 million, less than 1 million. So a 2 million candle. And you have this candle here. That would be pretty good. Stand, there's two things. You rather setups where there's no close previous resistance. And, well, this kind of flagrant. That is kind of pretty close, right? And this, you get to see it with Ichimoku cloud. There you go. So now we have all some sorts of resistance right here. So what you want your close to close right above the Ichimoku cloud. And that means you want to close above 18. And that's the valid resistance. If you use Ichimoku cloud, that is going to be effective against you going upwards. So you avoid whipsaws, you avoid the price action going inside the cloud and having difficulty getting out of it. That's what you want for that A++ setup. And you want confirmation from the higher prevailing trend. Let's go back on the monthly. You see, here's a line on the weekly. But what you want the trend on the monthly. So right here, that Ichimoku cloud coincides with the month, that smaller pattern that we were looking at. And here's my candle. I want to break out like that, right above the 18. So 18, that's the level you have to keep an eye on for GEI. If you have a monthly candle close above 18, go to the weekly chart and prepare your entries for that. If you have the volume, that's a stage 2 case scenario. So this nice base going upwards, stage 2. We're closer to the bottom. I wouldn't try to get in now. Wait until the stock moves 40 to 50%. Stan always says that's the good stocks have a good move, builds up momentum, and when you get in, you go in for the nice stage 2, not for the possibility of a stage 2, and then you get trapped because you got in too early. You got greedy, essentially, another emotion management issue, because you want to maximize your potential reward or minimize the risk because you want to buy a super low. Guys, it's a recipe for disaster. Wait until there's a stage 2 breakout, then get in. I'm saying that out loud. I'm saying it mostly maybe for myself. The more I say it, I guess, the more I'm getting, it has an impact on my trading. Especially these podcasts are helping a lot. I guess some people need to write, but it's good to have a mirror. I always listen to these podcasts right after I upload them. I listen to them and see if there's anything I can make better, and just hear myself talk. It's a different thing to think it and do it. Another thing to hear it, so it goes in through your ears, back to your brain. You digest information a second time. If it just generated in your brain, you're digesting it right there on the spot. It's just one less way that you're removing from your arsenal of really sinking it in. If you could read it, even better. Sometimes I read the post, I read the description of what I'm going to talk about. Reading it another way goes in through your eyes, your brain digests it, and it hardens even more the information and knowledge. So all these medias, use them, and you won't get lost. And when there's something that's going to happen on the chart, the price action, then you're going to come back to these hardened plans, hardened reactions that you already have planned in your brain for those events that are going to happen later on. You'll have less chances of landing on an emotional landmine, and you'll be able to play out your framework the way it was meant to be. Okay, GI. And if there's a close under 16, always put my alerts. If there's a close under 16, then stage 4, baby. All right. Keep an eye on those levels. You could get there fast. Ciao.